Hello guys, it is Saturday morning. It's about 9:30 and welcome to another edition of the Macro Cafe. I'm your host, the Cowboy. This is Elliott Wave Cafe. Let's get started. All right, I'm going to get my mugshot out of the way, and we're going to take a look. I actually prepared for you about 20 charts. I usually do a little less than that. We're going to try to, stay within a normal time limit. Hopefully, we can get all this done in about 20-25 minutes. And I have some stuff to show you here. Before we do, let me show you where you can find me. This is ElliottWaveCafe.substack.com. You can find me right here. I will have the Daily Drip. I have the Strong Pigeon Report. There's going to be a video library with videos from YouTube and things like that. But this is where you can get in touch with all my latest analysis. And then you can also find me on Twitter up here at Elliott Cafe. So if you can, check those two places out, I'll be happy to, have you along. Okay, let's take a look and look a little bit at macro list. So this is basically going to cover a bunch of weekly charts, and we're going to analyze kind of what happened into the S&P 500, the NASDAQ. We're going to take a look at some commodities, mid caps, small caps, Bitcoin, Ethereum, stuff like that. All right, let's begin with the S&P 500. So what's going on? Are we ready to get into a bear market? Do we go into a bull market? Are we going to continue sideways? What's happening up here? You could see, obviously, this 200-week moving average. It's still below the prices. And we're pretty much sideways since the middle of the last year. We're fighting this 3,900 level. This is a very, very sticky level. And I'm still surprised at how resilient this market is after all this banking news and kind of all the fear that's been spreading around for the past few weeks. And the S&P 500 is actually up this week about 1.4%. They've tried to take it lower last week, below 3,800. That failed. Push back to the upside. And we're still kind of sideways, right? We're not really into any trending environment in here. I mean, you can look at the RSI, right? We're just dead at the 50. And if you can look at the PPO, which is a percentage version of MACD, it's at 0 as well. So we're in a trendless market. I think it's meant to grind psychologically. A lot of people, it's meant to kind of shake off all the bears. It's made to shake off all the bulls. People want to kind of be on the sidelines, not really knowing what to do, not really wanting to take risk. And that's the nature of this type of consolidation. And eventually we'll break out of here and we're going to go into a beautiful trend. I think it's going to be to the upside. I'm pretty bullish on the market. We've had some interesting developments here on the tech sector and communication. There seems to be an appetite for a little bit of risk. But there is also fears of recession. You can see the 10-year yield dropping. We have a bunch of these kind of value stocks coming down, micro caps, small caps. So, pretty messy picture. But amongst all of that, I remain pretty bullish. I like what I see, and I like what's happening underneath the market. So, take that for what it's worth. But I will continue to remain bullish until there are some serious breaks of the 3,800 in the S&P 500 and 3,750. So let's kind of continue to go here. I just kind of want to give you my view, but basically what I'm waiting for the break of 4,100. We have long positions in the SPY. We've added, a couple of stocks also on the long side as well. But basically we're looking for the 4,100, 4,200 to get taken out, this 4,300 resistance, and then for the beginning of a larger trend. For right now, like I said, we're still kind of sideways, but look at the volume that's been coming up in here. With this kind of latest couple of weeks of buying. I'm pretty impressed by that, and let's see if that's the catalyst for something better. I mean, the closing on Friday was pretty strong, even after you've had all those kind of Deutsche Bank news, and the market was closing out pretty strongly. OEX, it's basically an index that looks at the top 100 stocks in the S&P 500, and you know, it shows a pretty good performance, 1.6, so a little bit more than even the S&P 500, which shows again just a continuous appetite for these kind of higher cap stocks. Maybe it's a flight to safety. Maybe you know, maybe people are just, I mean, maybe just Wall Street is just, you know, wants to be in some good, solid investments. And, you know, most of them are in this kind of top 100. And, you know, it shows, again, this kind of shows a lot of resilience. And we're above the moving averages in here as well. And this looks like a small correction lower. I'm going to go with the 1, 2, 1, 2 out of here. I think we're going to continue to break to the upside. That's kind of how I see it. I like the volume. So again, just pay attention to that top 100 stocks. Take a look at the mid caps. Mid caps have been kind of killed in here for the past, I don't know, actually a couple of months. We actually, I mean, for the past, let's say 3-4 weeks, we've been dropping severely. We're only up about 1.25 this week, but this is actually good versus what's been happening, you know, for the last 2 weeks. But we're coming into some decent support. I mean, you can see 2350 in the mid-cap index. It looks pretty good. We're above the 200-week moving average as well. We've done almost like a small doji, a small indecision after some serious sell-off. I think the next week we're going to go up in the mid-caps. I actually think that the mid-caps and the small caps are going to outperform the large caps now. I think there's going to be a rotation out of the trade that's been working pretty well for the you know, past few weeks into some of the stuff that hasn't been working, and they're probably are going to get a chance here to rally. So that's kind of what I'm going to look for as we're opening up the end of this month and the beginning of the next month, April. Take a look at the small cap index. Barely surviving above the 200-week moving average. Still a pretty sideways move. This one broke below the December lows. Counting this one, since this is Elliott wave, right? Counting this one in a bullish manner, it's a little tricky. You would have to maybe do a flat out of this ABC. I have certain issues with it, so I don't have a good count for all intents and purposes. You know, if you're thinking that's an ABC, I think you have all of the right to believe that. And based on that, we should be breaking lower. Something tells me that we won't, or if we do, you know, it's just going to be a small, maybe a small C wave out of here, and then we're going to reverse back to the upside. So I don't see any type of huge bear market unfolding at the moment. So that's on the small cap side. NASDAQ, oh my goodness, NASDAQ, it's been doing great, up 2% again this week. After last week, we have done a massive outside weekly day, a huge bullish engulfing of the trend line, of the key moving averages. We're up into resistance at 12,767, 13,000. And I think once this go, we're going to go to the next red line here, which is upwards of 13.5, maybe 13.7. I have a PPO that's breaking through the upside at 12 over 26. That's moving. I have an increasing volume that continues to build. And, you know, this market seems to be set on a path upwards. And I'll continue to press longs on this side. I'll look for stocks in here. And I think, you know, it looks good. And again, you got to have a plan B in case we're starting to break back below these levels. I think things could start to look ugly for the market in general. Remember, these are some big stocks in here, and if those stocks give away, you know, we're going to have some serious losses in the markets. But as long as this holds up, I think that we can expect further upside. RSI is moving higher. All right, Dow Jones. Dow Jones has been struggling. It's kind of somewhere in the middle. Again, just like small caps, mid caps, right? There were some banks in here, some value stocks, and all of those have gotten hurt here over the past couple of weeks. But again, just after some kind of serious weekly sell-offs. Last week was a little bit of a doji, and I like what I see this week with a little bit of buying. Not a whole lot just yet. Let me look at the volume. It's all right. It's increased a little bit this week, but I need to see a bit more. I mean, this, in my view, that's a beautiful correction after an impulse, and I'll treat it as such until you start to kind of crack back below 30,000. If you crack below 30,000, I think, you know, kind of all bets are off, and you can start to think that maybe new lows are going to come in this market. So again, you know, I kind of know where my protections are. I know what I want to see. And I'm encouraged by the price action here as well. We were only up about 1.1%, 1.8, 1.2 almost in the Dow Jones. So that's where we are with that. Now, Dow Jones Growth Index. So again, just a a constant outperformer here. You could see it looks pretty similar to kind of what you're seeing in the Nasdaq. It's threatening to break above this 5,200 level. The PPO, it's pushing higher. RSI, it's still at 55, so we need to see this kind of pick up momentum. What we call this a piercing bullish candle, when you have a bearish and then you open lower and then you go back up and you reverse. I think that's a pretty good reversal after what looks to be a pretty decent correction over here. So I was just checking to make sure I'm recording, guys, and hopefully I am. Hold on a second, let me just double check. Yes, that continues. That looks good, because I've done a video for the members of the Pro Room, I think last week, and I've been going on and on and on for about 20 minutes. And when I look at the left, it was off. So stupid me, but here we are. I'm just double checking that. Okay. All right. So that's growth. Take a look at value. Clearly, right, just underperforming here. They've been dropping it. I mean, I like what I see this week. Again, I think these are kind of two double dojis in here. Quite a bit of indecision. I mean, why it's not continuing to sell off, I don't know. Maybe that's a right shoulder, that's a head, left shoulder, inverted head and shoulder in here. And, if we break above 4,100, we're off to the races again. But one step at a time. I think we got to get back above these moving averages, and then value will come back in favor. Or at least trend in the same direction with growth, hopefully. But, just I wanted to show you a little bit of a look in here, how much, growth is basically underperforming value, and why is that? And I'll take a couple of seconds in here to just kind of run you through something in here. I mean, take a look at the sector's performance since the beginning of the year. And I mean, look who's leading, okay? Look who's up 18%. That is communication. Up what's the next one? The pink one. XLK 17, technology 17, 55, and then you got also consumer discretionary about 10% since the beginning of the year. Everything else is below zero. Now these top three sectors, look at this. Okay, hold on, check this out. You're probably familiar with this. This is the sector rotation model. If you're not familiar, it basically shows you the business cycle from a full recession, early recovery, full recovery, early recession in blue. And then you have the market cycles, market bottom, bull market, market top, and bear market. Up here, you have the 11 sectors in the S&P 500. What's been underperforming almost since the beginning of the year? If you look at utilities, if you look at financials, if you look at real estate, even healthcare, all that stuff, it's been coming down, right? So that means that you're in an early recession, maybe middle of a recession right there. The bear market is taking place, has been taking place actually since the beginning of whatever, last year, depending on which index you're looking at. No, actually 2020, 2021? No, 2022. It started, right? Yeah, 2022, because the whole last year was in a bear market. Man, time flies. I'm just like, and then, I mean, look who's leading. Technology, right here. Discretionary, communication services. Industrials have been pulling back a little bit, but technology, discretionary, what is this? Market bottom, full recession. Are they sniffing out the fact that the Wall Street is buying this? Are they sniffing out the fact that we are getting into maybe a mild recession? The Fed is going to cut rates, and Wall Street is positioning already on those prospects. And I don't think they're wrong. You see what's happening here in the yields, the way they're dropping, telling the Fed that they should ease. You see what's happening with all this buying in here. And I think that's what the market is trying to tell us. Dump your financials, dump your, maybe even energy, utilities, real estate, things that, do better when the rates are rising. And, hold on into technology, discretionary, and communication services. And this could lead here from, you know, as we're forming up this bottom in the market. I mean, I'm going back. As we're forming up this bottom in the market, you can look at the S&P 500 at anything, you know, and we're beginning the next bull market, the next upper phase in here, that's going to be led by these guys. So that's kind of what I see. All right, so that's just, I just wanted to kind of walk you through that, and you know, we can look at some performance as well. But I mean, just let me show you a couple of things in here too, because this is pretty cool. So look, since the beginning of the year-to-date performance, Treasury yields down, oil down, small cap index down, Russell down, and look at here, Bitcoin 66%, gold maybe sniffing them cutting rates and maybe stimulating the economy, NDX, NASDAQ, right, bonds, growth index, copper, top 100. Check this list. This is a huge list of ETFs that I have. Now look at this, year-to-date performance. Bitcoin Grayscale ETF, ARK Next Gen, semiconductors, fintech, video gaming, innovation, semiconductors, robotics, communication, technology. I mean, look at the performance here. You want to see who's, you know, I mean, we're not going to look at Russia, because Russia, I should just delete this in here. They don't even have it in, right? But look, banks, cannabis, still bad on cannabis. I mean, I'm waiting for a turn in there. I don't know if it's ever going to come, but maybe it will soon enough. Small cap energy, finance, energy, nat gas, you know, and I mean, everything that's kind of been working last year and the year prior. You know, we're moving into, you know, different stuff, even natural resources, I mean, healthcare, just bad. And look at the year to date. And I think this trend could continue really well. I really do think so. So just wanted to kind of give you a quick visual on kind of how that looks. Okay, let's keep going with the macro. That's value, Russell. Big support right here at about 160. Again, we just did a little crack below the December lows and now came back after, in 2 weeks of dojis. 2 weeks. I think this smells bullish next week. That's what this is telling me. I've actually opened up a triple leveraged. I don't even think I told my members that. TNA, it's the ETF. It's 3 times the performance of Russell 2000. I think that's what that is. Let me just put it up there. Now, I don't recommend this. Okay, it's your own money. This is no financial advice. Okay, and this is Direction Daily Small Cap Bull, 3 times the shares. So this is, yeah, this follows. It doesn't say here, but it follows the Russell. You know, just looking for a bounce here, maybe 35. See if we can get it next week. All right. Now, IWM, I mean, flat as a pancake, guys. You know, if you had those big pancakes, you know, they're just like flat. You know, the big ones, what do they call them? In Romanian, they call it clătite. You know, they're just like big, like that. That's how this price action is, flat. All right, let's take a look at Bitcoin. You know, it's been struggling this week. I mean, I guess it's staying below 29K. It's hard to kind of break it. Trading 27.6, pulled back a little bit. There is support at 25.5, but you can see the performance. I mean, you know, I think we've shifted from a bearish type of a market back to a bullish market. I mean, okay, we got to give this moving averages time to turn. You know, the 10-week, it's pointing up. This 30-week, it's starting to turn. And the moment they're going to point upwards, both of them, I think you're buying the dip. So is this a 1, 2, 3, 4, 5 with an ABC? Maybe. Is this a 1, 2, 1, 2? Maybe. I'll take either or. If you want to see the latest counts, I mean, I'm staying on top of them on the pigeon and the statue right there on the daily drip. But you know, that's just kind of on a intraday basis and daily basis too. But I think this is pretty bullish though. I mean, yeah, doesn't have a lot of continuation, so maybe there'll be a little pullback, a retest, maybe a little bit of a second wave in here. But it looks pretty good. I mean, that's a big inverted head and shoulder, and we broke above it. Look at the PPO moving higher. Yeah, I know it looks scary. Every time you kind of had like a, what is it, a $9,000 rally in Bitcoin. You know, so, but we're above key moving averages, and we shifted the trend, so we got to stay bullish. All right, Ethereum looks good. Broke again just above that resistance. Nice reversal pattern out of here above the moving averages, trending up. PPO moving to the upside. Hammer followed by another candle in here. Maybe a little bit of a pullback. I don't want to see it back below 1600 though. You know, if I see it back below 1600, it's going to start to look ugly, and below 1446, I think we can get in trouble and a little bit of a deeper correction. So we need to stay above those, and that's kind of my clue. But I think it looks pretty good to Ethereum. I like to see this type of volume, you know, happening in here. Hopefully it's coming. TLT, you know, it's never good when the prices touch, you know, the candles in here. But we've been coming back. I mean, buying bonds and selling yields. Again, it's just maybe a little bit of a recession play. Yields coming lower. Fed having to cut. I think the bond market is already pricing in rate cuts. I looked at the CME website, and they're looking for, I think, a pause next month, another pause in June, I think, and then a couple of rate cuts towards the fall. That's what this market is trying to kind of tell you. So if you think that's what's going on, you know, buying bonds in here, it might not be a bad idea. It looks like an ABC, maybe a push up towards 117 in bonds, and here's the yields, just kind of sitting at about 340. You know, that big resistance, support, resistance, now support. It looks like they might want to crack that. Now, the trick in this is not to come out too aggressively. Yeah, you want them to kind of come down steady. Just steady and nice, and, you know, without creating a lot of, you know, drama and havoc in the markets. If they come, you know, just kind of steady, 3.2, 3.0, you know, the tech trade will be good, and, you know, people will enjoy their bonds a little bit in here, lose some yield, but it is what it is. So that's kind of where we are, because now we're above these key moving averages, and when you lose these, it's a problem. It's a bit of a problem. You know, we lost them one more time here. You know, my longer term count still shows that it might be a fourth wave, but what if this fourth wave takes the whole year? You know, so we'll see. But that's on the yields. And then the dollar, again, is just a little bit of a signal on my dashboard. And again, I'm following it every day on the pigeon and the statue on those updates. And I think we got to push higher a little bit in here. I think this was an A or a W, this was a B or an X, and I think we're probably going to do this to the upside. I mean, look at the weekly close. It went up kind of negative, 0.6%, but it left a wick below, which means that a candle wick, right? A tail, how they call it, 101 from 102. And if you follow the updates, you'll see that that's what I was looking for, ABC, and then I want to see another push higher and then let it reverse. The other option is that this is the whole second wave, which I think is too small. I mean, if that's a second wave, then what? Then how is third going to look, right? So, again, A or 1. And then that's an A, B, and then maybe an up in C. Again, I want the dollar to go up, but just kind of, you know, take its time, not be a rush into dollars or rush into safety for anything like that, right? If anything like that happens and you see the dollar exploding, then it's bad. So we don't want to see big explosions. I mean, look what the dollar did in here. And what did that do to the markets? GSG, it's a commodity index. You know, I've been screaming out of the top of my lungs last summer about the commodities. And even the inflation, you know, I was wrong on the inflation, a little bit on the duration time, but it's been coming off, and the commodity index is following along. Like, if inflation drops, commodities are gonna come down, and you know, I mean, this shows weakness. There's nothing really bullish in here. I mean, there may be oil. We'll try to push to the upside. We'll take a look at the chart here. I mean, now there's a big resistance at 20 in the GSG, but I don't. You know, I'm not so bullish on this stuff. Nope. Okay, gold. Now, I'm going to say something to gold might surprise you. If you see the updates, you already know. I am short gold. and I think it's going to go lower. So might come back here in a couple of weeks and just kind of, you know, be full of bruises from the losses I took in gold. But I don't think it's going to go anywhere fast or too fast. I think it's going to correct a little bit, maybe towards middle of June, end of June, somewhere in the beginning of the summer. And then, you know, then we can start, let's say, the larger rally in gold. So what I'm seeing right now, again, it's either a 1, 2, 3, 4, 5, and then we're getting an ABC back. I was counting it as an A, up in B, down in C as a flat. I'm still going to hold on to that view. It's not as pretty anymore. And the other one is 1, 2, 1, 2. So that's the most extreme bullish one. But even that one, it's pulling back. Now, I think we're going to pull back below these levels. So below 1800, but you know, that's a stretch. First, we got to get to the 10-week moving average, and you know, now we have support also right here at about 1925. So let's take it one step at a time. I mean, I'll take a 1925 sell-off, and then, you know, if we can crack lower, that'll be it. But you know, I'm holding my shorts for now. Big volume into this break. So, but don't forget, you're coming into resistance. You're coming into 2000. You know, so they're not just going to give up this like. You think the market makers are just going to let you like go straight through it up to 3000? I've seen this movie before. All right, copper. I like copper going up because copper going up means you know, things are better. That we're optimistic that, you know, people have jobs, the economy is going. You know, it doesn't really signal recession. This was a big fearful drop in copper. In here, sat back to support, nice bullish weekly close. I think we're going higher. And then WTIC, just from the 20-week moving average in here, just a little bit of a support. I think, you know, we'll see if they can crack back above the resistance. I was telling my members, you know, we're a bit bullish oil from these lows. And, you know, now we're going to come at this kind of red line. This chart is kind of scrunched up because of the sell-off, so you don't really see. But if you pull another chart, you'll basically see what that level is. And maybe we'll crack a little bit above it. But, you know, listen, as long as these lines are pointing down, you can be bullish. Not for too long. You know, these bounces, you know, you can take advantage of some of them. But this continues to kind of favor selling on the short side. And then EFA, these are the markets outside US. So we were talking Europe, Asia, Eurasia, you know, Japan. So Australia, and look at this. Pulling back, corrective, I think so. Maybe a bit more, but you know, I think this move in here, it's not just a fake move to the upside. I think it's the beginning of something else. And the volatility index, you know, if you want something interesting, right, down 15%. You got to keep an eye on this. I mean, many times, you know, I don't even look at the market. I look at the VIX, and if I see VIX or if I hear 25, 26, so I'm like, it's probably a bloodbath in the market, right? If VIX is back towards 20, 21, you know, it's kind of bullish. You know, things are looking better. So it's kind of mean reverting. So, you know, they try to instill a lot of fear. Goes back to 30. Oh my goodness, you know, sell everything, and then come back down. And they're buying it. Big range. I mean, we still haven't been able to break. I mean, something extremely bad has to happen, you know, for it to kind of break 35 into some kind of a rocket ship like this guy. I don't think we're going there. I think this whole kind of bank situation, it's, you know, it's pretty much over. Actually, we bought some banks, just a kind of a basket of banks, and I send out a free final wave in backs. It's not a lot of information here, but basically just kind of shows you the KBWB. You know, 1, 2, 3, 4, 5. So just a simple comment in here. Larger third, fourth, fifth. Maybe you'll do another little bit and another drop, but I mean, the volume is decreasing already. I think this kind of trade is pretty much over, and we're probably going to get some kind of a decent pullback. Again, I'm not going to look for, you know, new all-time highs in banks in any way. right? This is just probably a trade that's going to take maybe KBWB, which are the, I think, top 100 banks in the NASDAQ or something like that. I think that's what it is. The largest banks in the NASDAQ. And then, you look back towards 43, we're trading 39, $4, 10%, 15% rally, I'll take it. And kind of that's what we're, that's what we're looking for. And with that, I wish everybody a great weekend. Thanks for being a part of Elliott Wave Cafe. Don't forget to subscribe and like. Visit me on Twitter, visit me on Substack. And I appreciate you all being here, and I wish you a great day.